Hello and welcome to Market Insight. I am Lavina Emma. Now on Monday, 25th March and Tuesday, 26th March, the Central Bank of Nigeria Monetary Policy Meeting had their 294th meeting to actually discuss the MPC rate. So this meeting took place at the CBN headquarters. Now, the results of the Monetary Policy Committee meeting was an increase in the CRR rate and also to combat inflation also. So the MPC meeting took place at CBN and the hiked benchmark interest rate was by 200 basis points, so they've increased it from 22.75% to 24.75%. The new interest rate is a jump from the 22.75% as of February last month, and it was announced through a communique issued by the governor of CBN, Mr. Cardoso. So this second hike rate now, is it going to be able to combat inflation? And Mr. Cardoso announced this new hike rate during a press conference. So the cash reserve ratio was also increased. So for deposit banks, it was moved to 45%. However, the MPC adjusted the CRR rates for merchant banks to 10%, from 10% rather to 14%. The committee also retained the liquidity ratio rate at 30%. Now, all these new figures actually were asking questions. How does it affect people in the economy? How does it affect the current prices of food items in the economy right now? And are these new figures released by the Central Bank of Nigeria, will it be able to combat inflation right now? As we know, inflation is currently at 31%, which is quite high, actually. So these and so much more, what I'm going to be discussing with my guest this morning. So we're going to be discussing with my guest, Mr. Oladetan Oluwatosin Emmanuel. He's a business strategist and a financial analyst. So welcome to Market Insight this morning, Mr. Oladetan.
Good morning, Lavina.
Thank you, thank you. I hope you're doing fine.
Trying our best.
Okay, that's good to note. Okay, so yes, I mentioned earlier on that the Central Bank of Nigeria Monetary Policy Committee has increased the interest rates to 24.75%, and people are asking if these figures are really combating inflation. As we know, inflation is 31.70%, so it's increasing. That's the inflation. But why, as the Central Bank of Nigeria, why is the Monetary Policy Committee, why did they keep hiking up these interest rates?
Okay, so this is the second monetary policy committee meeting that is going to be held since the resumption of Oladetan Cardoso as the Central Bank of Nigeria governor. And one of the mandate of the CBN is for them to be able to combat inflation or to ensure price stability of prices of goods and services. Now, in doing that, if you compare, the interest rate currently is about 24.75, and the inflation rate is about 31.7. They see this disparity. So what that implies is that if I have money today and I deposit, it's better for me to spend today than for me to go and invest. If you look at over the last 1 month, we had issues of treasury bills and we have issues of homo bills. Treasury bills are more or less debt by the government and homo bills are debt by the CBN. Interest was around between 19% to about 21%. So if I'm going to keep my money for 1 year, I'm only able to earn 19%. But if I'm going to keep my money for 1 year, what I'm going to spend on has already increased by 31%. So the marginal propensity for me to save is not there. So the right incentive for me to save is not there. In fact, that is just the paper figures, because Nigerian inflation is majorly driven by the basis effect. We are not comparing with recent trends. So an average person, once they receive money today, it's better for me to go and spend that money now and do not save. So if an average person keeps spending his money and you don't have an incentive to save, then it is a bit of an issue. Although, despite the fact that Nigeria is among the top 15 countries with the highest inflation rate, we've not gone to the likes of Venezuela or Argentina that are having inflation rate at sporadic high. So majorly what the central bank is trying to do is to be able to taper inflation. So to reduce the increase in the prices of goods and services. But Nigerian inflation is more or less a hybrid of demand pull inflation, that is as a result of a lot of money in supply, a lot of money in circulation, and we know and also a cost push inflation as a result of increases in the prices of goods and services. But even if you take a critical look at the Nigerian inflation figures, we saw that is the major driver of the increase in prices of goods and services is food inflation. In fact, it's contributing about 16% of the total movement in the prices of goods and services. So that cannot be addressed by the CBN inflation rate. In fact, that is even likely to even add to the increase in inflation rate. But what CBN is trying as much as possible to do is to reduce the money in circulation, and by creating the right incentive for people to be able to invest. We've seen foreign portfolio investors come in so as to pump in money. Oh, wow, I can earn about 21% here in Nigeria. Meanwhile, when I'm going to increase save in the United States, I'm earning just like about 6%. And we've been seeing news that the Fed is likely to cut rates. So that means interest rate is going to, the return on the average investor is going to reduce. But in Nigeria, I can earn 31%, 23%. If the foreign exchange is stable, that simply means I can invest in Nigeria, earn a higher return, then convert my money back to US dollars. So one of the major things that the CBN has been doing over the last 6 to 8 weeks is to ensure that there's stability of the foreign exchange and to address the demand pull inflation by increasing interest rate. We did not, people might ask that they've increased interest rate before, but we've not seen the effect. They increased the interest rate sometime in March. March inflation figure is going to come out sometime in mid-April, so we'll be able to see that. But for now, they just have to increase it because we still have a wide margin between the interest rate and the inflation rate. Interest rate means the saving interest I will have earned on savings, and the amount prices of goods will have increased by. So that margin is there. We need to close that gap to a very reasonable level.
Okay, earlier on when I was speaking, I mentioned that the Central Bank of Nigeria, the cash reserve ratio for deposit banks was at 45%, but the one for merchant banks was increased from 10% to 14%. So what is the rationale for increasing the cash reserve ratio?
So basically, the cash reserve ratio is to ensure that CBN has a hold of the money that the bank has. So for example, I deposit 100 naira in the bank.
Yes.
CBN has said that you must maintain 30% within your vault so that in case any customer demand for it, he's able to have access to his fund. Basically, what does bank do? Bank is a business of intermediation. They take money from some people and they lend to some people. But the people you've taken money from, if they come and request for the money and those that you've lent the money to have not yet paid, then you need to be able to meet that crisis. Because if everybody that has kept money in the bank decide to go to the bank today and go and withdraw their money, the bank is going to collapse. Yeah. So you need to maintain a certain amount in the vault and ensure that people are able to do that. Also, you also need to maintain a certain amount with the CBN so that the deposits, the savings of Nigerians are protected, so that in the event that the bank wants to even go into a bank run, CBN can easily intervene with likes of NDIC. So the reason why they've increased that amount from the previous 32.5%, which was as July at the last MPC meeting, the 293rd MPC meeting to 45% was to be able to take a lot of money back and to reduce people from squeezing the bank so that people do not have much money to spend. Because if I go to the bank and I'm going through a lot of stress, withdrawing my money, I'll say, let me defer that and I will not be willing to spend that money. And also not to be able to create that right incentive for people to have a lot of money. When there's a lot of money in circulation, people really want to spend. If I have more money in my pocket, I'll remember that, oh, I've not settled this bill. But the moment I don't have enough money in my pocket, I'll still find a way to live or struggle to live within that same range. So, but for deposit money banks, banking occurs across different platforms. So we have the deposit money bank, which can take from a large pool of customers, and we have the merchant bank, which are majorly targeting the corporate and the commercial customers. Majorly, they just trade on they don't do retail banking like an average person can invest. So you also need to ensure that they also feel the pain. They also feel the pain so as to not to release a lot of funds out, so as to track money back. So majorly why the CBN is doing that is to be able to reduce the money in circulation. We do that through the CRR, and we also do that through the OMO bills and the treasury bills.
Okay, thank you very much for that, Mr. Oladetan. Okay, so what are the potential consequences for such a high interest rate? I mean, he mentioned, I said inflation is increasing. It has increased to 31.70%, and food inflation is the highest right now. And it's not like, yes, I understand the CBN governor and his team are working hard, but we're not seeing any impact because in a few days' time, rather, we're going to be entering a new month, and inflation is not slowing down anytime soon. So what are the potential consequences for what this directive by the Central Bank of Nigeria?
Okay, so basically the monetary policy rate is more or less like a benchmark for banks to set their lending rates to their customers. Naturally, the cost of business is going to go up. The cost of funding business, the cost of debt is going to go up. Yeah. If the cost of debt is increasing, the cost of equity is also likely to increase. Now, it is not favorable for those that are majorly debt funded to be able to sustain their business with this consistent rise in interest rate, because what 24.75% means is that within 3 to 4 years, I've paid you back the total capital that you've even lent to me. No business is able to sustain like that over the long run, because what is even your gross margin, what is even your net margin at the end of the day, or your operating margin before you even pay the interest? In fact, you are going up with nothing, and the shareholders need to go on with something because they are exposed to most risk. So if you observe, if you look at the stock exchange over the last couple of days, it has been trying to reset itself. That's one of the issues with the increase in monetary policy rates. All these abnormalities we've been seeing in the stock exchange will try as much as possible to correct itself within the short term. What are we also likely to see as a result of this interest rate is that foreign portfolio investors are going to come in. Immediately, the 293rd Monetary Policy Committee held. The next thing was for the CBN governor to go and add an investors meeting. We know that it's hot money. What we mean by hot money is that it's coming in because of the high interest rate. By the time the interest rate goes down, it leaves the system, but at least it has tried as much as possible to correct a bit fix. It is not even favorable for the CBN to continue to increase rates. So because CBN need to find a way to be able to pay back that money, it is compared to when the government was taking money from the ways and means window without no interest. Now the government need to spend up to 24% to be able to pay back. We should not forget that our debt to GDP ratio is like about 66.7%, or our our debt to total expense is about 66.7%. And that is to say that if we cannot continue to increase our debt over the long run, it's not sustainable for us. So the only reason why CBN has taken it to this level is to see, let's even see the impact on inflation. But also, something has not been done. You cannot just keep playing on one side and we neglect the other side. The cost of diesel have increased. Cost of logistics and transportation have increased. Insecurity has also increased. People do not have the confidence of going back to their farms to go and plant or to go and harvest their crops and all that. The cost of energy has also increased for manufacturing companies. Transportation and logistics, we've seen kidnapping here and there. So indirectly, we cannot even say we are likely to see a relief within the short term. But CBN is not going to wait till when they achieve like about 21.4%, which is in the line with the budget, 2024 budget, for the inflation rate that is targeted for the year. But they are likely to still hold. We don't have a monetary policy committee meeting in April. The next one is likely to be in 2 months' time. So as to see, we've been seeing positive feedback from the stabilization of the foreign exchange over the short period. So we are likely to see a hold, but CBN will still want to reduce it. The only thing that can make CBN to continue to increase it is if inflation continues to go up. And what can make inflation go up is if the insecurity increases, cost of diesel increases, energy cost increases, logistics and distribution is not addressed. So government really need to do something about that.
Going further, so what is the performance so far of the capital importation drive? Very few people are asking these questions actually, because we know, yes, as he rightfully said, he has hiked up the interest rates. As he also said, for the deposit rates for deposit banks was retained at 45%, and then merchant banks, you've also explained that. But what is the performance so far for capital importation drive?
Okay, good. So we've been seeing positive returns on the capital importation. For example, now the Nigerian foreign exchange reserve is above $35 billion, and that is one of the highest we've seen over the last couple of years. So money is coming in. But what can you do to ensure that this money will stay in the system? Where is the money really going to? We've also seen that the MPC proceeds that were previously are now being domiciled with the CBN. So CBN is trying as much as possible to ensure that there is a true demand of dollar. Because we cannot really say what exactly is the true demand of the foreign exchange in the Nigerian market now. CBN is trying to maintain what exactly is the true demand for dollars, so as we're able to maintain it at the exchange rate at a very stable point. So all these, if we're able to get the exchange rate stable, we might not be able to achieve what we had in the budget at 750, but we should be able to have a reasonable stability. We'll be able to have improvement within the system.
Okay, thank you for that. Just hold that thoughts for me, Mr. Oladetan. Okay, Mr. Kabira, are you online with us now? Join us shortly, actually. Now, this aggressive hike rate by the Central Bank of Nigeria, do you think it will be suitable enough to curb this inflation that is moving so fast? Do you really think so? In your own opinion, please, Mr. Oladetan.
So basically, it's not even sustainable for the CBN to continue to increase the rate, because it is more or less like a punitive measure. You only have to do this as a punitive measure, as the last solution. CBN, nobody will want to give someone money and give you like about the same capital within 3 to 4 years. If I'm giving you 22% every year, I just need to, for within the space of 4 years, I've paid you back the whole capital you lent me. It's not sustainable for anybody, not even for the CBN or for the federal government. So the only reason, the only thing that CBN can do is what is within their power. CBN is not going to go to the farms. Yes. CBN is not going to address issues on the road. They can only address the demand for money. Then we need the fiscal policy to intervene, and this has been an issue we've been having with within the Nigerian economic system. We need the appropriate balance of fiscal and monetary policies to play together. Just the monetary the monetary market cannot kill the giant or cannot stifle the giant. They also called it out in the last Monetary Policy Committee meeting to expand the tax net, to reduce food insecurity. But let's call a spade a spade. Nigeria, the fiscal policy really needs to address its cost of debt funding. That's one major issue. Address insecurity issues within the country.
What other points or what other suggestions do you have apart from debt funding and government stepping down borrowing?
Despite the fact that the government said they were going to implement the Oronsaye's report, when I still checked the dailies yesterday, I saw that new directors generals were still being appointed. That means there's a conflict somewhere. Government keep bringing more people, and those new directors, you need to provide them office facilities. You need to. I don't really understand. And the more you continue to increase your budget deficit, the more we have more pressure within the society. So what I think government can do, right, aside from the case of reducing their debt and reducing their spending, we need to look at the storage and the distribution networks. Over 50% of the goods that leave the farmland get spoiled along the road. What is the rail system? Can the rail system be used to transport? Even after they get to the final market, we will see things like touts or revenue. They said they are working for the local government, and a nickname they use for them is Agbe. I don't know what they are doing there. You take them to vocational centers, let them go and do more things productive. Take them to manufacturing organizations, let them be involved. Not that they are just staying on the street collecting money that they are not working for. So, for example, I brought my goods to the market I want to sell. A tax man is charging me, or an Agbe is charging me for that. I need to make profit at the end of the day, so that is also going to increase the cost of goods. So if you go to those markets, those normal food markets, people are likely to have a higher cost as a result of that. Also, the pass-through effect of the dollar. So for those that say they don't want to reduce the prices of their goods, if it is a perfect competitive market, if you are not the only one selling that good, if I come to your shop today and tell me this good is still the same good, is worth 5,000 naira. I go to another person's shop, it's 4,000 naira. I'll go to the place that is cheaper for me. What you are going to have a risk of obsolete stock. At the end of the day, if you don't even bring it down, you'll be forced to bring it down, or else you are going to lose. So it's just a market system. It's just a market system that will effectively fix itself. But another thing we should also consider, cost of power is not likely to go down, because even government have to step in to reduce the electricity tariff. So the major thing that we need to do is the monetary policy is trying. And if they continue with this trend, if there's no intimidation or there is no threat, we might get to a point in time where is not sustainable again. We cannot continue to increase rates. We cannot continue to tighten everywhere if the fiscal does not wake up. So the earlier the fiscal policies wake up, and the earlier the government intervention, the government decide to intervene in food security, intervene in insecurity, intervene in transportation and logistics and distribution, creating look at what the Lagos State government did. They opened some market hubs where you can get food cheaper. Every Sunday you can go there and get food at a cheaper rate, and they are very durable.
25% discount.
Discount. That is what they can do. A partnership with it. So you know that.
So you're saying it should be spread across all states?
Yeah, it should be spread across all states. You release more grains to the farmers, increase the education of the farmers, ensure that people have the free will of going back to their farms. The issue of insecurity is removed, is addressed. So with all that, we are going to see that the inflation rate is likely to come down. But if we don't address the case of the inflation rate, the insecurity and all that, inflation is continuing to go up. It just to remind you, as of 2 days ago, cocoa was trading at above $10,000 per ton. That majorly food and non-alcoholic beverages for our tea is also likely to go up. So what can you do? You need to see how we could intervene and not wait for the CBN. CBN is just like a punitive tool if the fiscal does not really wake up.
Okay, thank you for that, Mr. Oladetan. Okay, just before we go, yes, I understand what you're saying, the dollar effect. It's like I was talking to Mr. Kabira, I said it's not having any impact on imported goods. And then you also mentioned transportation. Like last week I was at the local markets at Obalinde, and most of the market traders were complaining that, oh, what they buy, they have to pay money to somebody calling himself tax for local government. So I mean, like you rightfully said, if these things actually curbed effectively, yes, I think it's also helped to reduce prices, not just having all these monetary policy committee meetings. And then the cost of power, yes, I'm sure when you mentioned the Orosanye reports that government said they're going to reduce the cost of governance, they actually said they're going to merge some ministries, or rather some parastatals together. But have we really seen this being effective? Because this is part of the things that, like you said, if you employ a new director, you have to employ assistants, personal assistants, advisors to this person. So it's not reducing, it's also increasing. So it's not just the CBN having monetary policy committee meetings, it's also, I think there's more to be done. Apart from the fiscal policy and the monetary policy, the cost of governance, actually. If you could just touch on that briefly, there's also more to be done. Yes.
So Nigeria is Nigerian government is one of the most expensive governments in the world.
Yes.
And most people are going to public office because of the emolument. Yeah, we see that several ministers are siphoning some money or allocating some money to what we saw the case of the budget padding recently. Don't make the place too attractive for people to come in. Ensure that in some advanced states, you are not even paid a salary. You only paid sitting allowance, which is not even up to a token which you hear. So we know that we are giving back to the state. If government can reduce the cost of governance, I think about 40% of Nigerian problem is solved. The oil side did not just start yesterday. It has started sometime in 2010, yes. And we are not seeing. We were even surprised that the president decided to take ownership that he was going to implement the oil side report. But what we are seeing is totally a disparity. So government really needs to look at that. We cannot continue to push the CBN to come and punish the masses. Meanwhile, you are not doing what should be done. If the government sits up, I think Nigeria is a country to go, and they should invest majorly in infrastructural development and investing so much in agriculture. Agriculture needs a total reform within the country.
Okay, thank you so much for joining us this morning, Mr. Oladetan Oluwatosin. It was really great having you here on Market Insights as we discuss this Monetary Policy Committee meeting and the recent hike in interest rates to 24.75%. So that was our package on Market Insights, and we hope you join us again on Market Insights, Mr. Oladetan.
Thank you very much, Lovina.
Okay, so that's our time this morning on Market Insights as we discussed how this will impact on the economy, how it will also affect food inflation, which is at its all-time high right now. And we hope that with these policies, and we hope government is also listening, will actually reduce the cost of governance and also improve on fiscal policy. We believe that inflation might hopefully reduce in the long term. So I am your host, Lovina Emma. So that was our time on Market Insight this morning. So stay tuned to the next program on Souk News.